Welcome to the end of day review for Monday, the 20th of November 2023. I'll start off with the news. As you can see, there was nothing significant for the day. We've got Bank of England Governor Bailey speaking at 7:45 my time, which is about 2 hours after the end of my trading session. So I said no bearing on my trading. In addition, I had not been interested in trading GBPUSD for today. Per the norm, I'll go through my live trading review for the day and then an EOD review. Starting with GBPUSD, as you can see, we finally broke through the 4-8 swing structure. In creating this, we had these buy to sell wicks. That was a flip of this extreme. The 4-8 OB itself was valid to then target this high. However, this materialized towards the starting of the New York session, and I was already quite comfortable with my analysis on a secondary pair and decided to stick to trading that and resume my primary pair trading from tomorrow onwards. EURUSD was another pair I was interested in trading this morning. However, this was based on the ERL momentum scenario. However, what you can see is when Frankfurt opened, price pretty much when Frankfurt opened and then subsequently London opened, we took out the target, and then during London we created more ERL, and that target was then taken out in New York. Unfortunately, it was not possible for me to get into any of these trades because, as you can see, at Frankfurt and the start of London, the Asia range was still intact, and then similarly when New York started, the London range was still intact, and by the time that was taken out, the target had already been reached, thus invalidating any further longs for the day. What I was waiting for during the New York Open was for this London session low to be taken. Once that liquidity was taken and we could find a full demand control shift, then we could trade that, with that being the target. However, that didn't materialize. My other pair I was monitoring was USDCAD. As you can see from the morning, USDCAD pretty much created a nice demand chain, creating a pretty nice primary leg from this 4H OB, and unfortunately during London the Asia range wasn't taken out. Upon New York Open, what you can see is the Asia range high as well as the London range high was both liquidated. This gave me confidence to then play the idea of New York continuations. We got this flip with no liquidity, so initially I had my entry below this level. That wasn't tagged. Subsequently we created a chain. We had a minor reaction here, creating a reactionary flip. This provided the liquidity in the leg we required. However, as you can see, the idea failed and the momentum didn't follow through. I was hoping to at least reach the last IRL point, and this was reasonable given that it's within range of the average daily range for November for USDCAD. As a result of this, we essentially took a loss. Well, we did take a loss. There was no two ways about that. I then did a full end of day review, evaluating all the aspects of my trade. The 4-hour analysis was identical, as you can see here. On the 15-minute, or the 5-minute rather, I then considered each aspect, and I was happy that the New York continuations met my trading plan because we had full demand control, flip validation, and then liquidity in the leg and sufficient ADR. I then considered the fact that Monday on average does not achieve the average range for the month, and I wondered if I was missing something by not taking this data into account and simply relying on monthly averages. However, there was enough confluences to support my idea of at least targeting this, especially given the fact that it was available IRL and we had not yet taken out the last point of IRL. Which is how I reached this conclusion, where I said I think this is reading too much into it. There was sufficient support, and if I was wrong, then this was simply part of the probabilities. Also, just taking a look back where I put my stop loss and where I entered. So I entered at the liquidity of the leg, and my stop loss was below the chain. There wasn't any nearby worms, and the next nearest 4H OB was here. However, placing my stop loss here pretty much negates the idea, because a 1 to 3 is a 1 to 3 risk reward is the minimum allowed per my trading plan, and that was not possible. So I accept the loss. The loss is an indication that the momentum wasn't there, and this loss simply means that you stop trading, because again, the whole idea behind New York continuations is to capitalize behind the momentum of the entire day's move to achieve the intended target. If we quickly glance at the daily, what you can see is the intended direction is most likely correct. We're probably going to end the day with a bullish candle, which means our daily direction bias was correct, and the intended trade idea was also correct. However, there just wasn't momentum towards the end of the day. That essentially brings me to the end of my end of day review for Monday the 20th of November 2023.